Good afternoon and welcome to this edition of Forex Daily Dimes. I am your host Josh Lilquist, and it is Monday here today, the 21st. We've got a lot to cover today. We had some viewer questions that I'd like to discuss here today. So we'll get into that. We're going to check out the equities markets. Markets both closing right now pretty quick here for the day. Pretty wild day. Some great volatility down, and end of the day actually not that much down. So we're going to cover that right quick. Cover some viewer questions, and also I'm going to dive into some sites that I like to peek at. If you like fundamental information or just some information about the currency markets or the markets in general, we'll check out the news for the week as well. Before we get started, as we know, there is risk in trading. You can and probably will lose money in the market at one point. So risking your own capital can be risky. That being said, past performance is not indicative to future results as well. So let's dive into it. So let's check out the equities markets. All right. So this is a site that I like to use. It's a free site for information. It's TradingView. It's free. I don't work there. I'm not giving a plug for TradingView. It's just a nice free site to use to get some decent data. So as you can tell, this is the S&P 500, the SPX, and as you can tell, we opened up gap lower, and market had a pretty big sell-off here and rallied towards the end of the day and closing only down about 1%. As we know, down markets are a good thing as well. We know that you can short the market to participate in down markets. So just in trading and investing, understanding all three directions, up, down, and sideways, is pretty important. So the S&P 500 down for the day. The NASDAQ gapped lower and had a pretty strong rally towards the end of the day here. So it was a pretty wild, volatile day. Let's check out the Dow Jones. Also gapped lower. Not quite as strong towards the end of the day here. Let's check out our esports ETF that we've been tracking here lately. An ETF that I like to take a peek at. So as you can tell, we pretty much have a parabolic move. So this is one thing that you want to be aware of. As prices continue to climb, what usually happens after a parabolic move up is you see a big move down. So be aware of that. Make sure you have your stops in place with that. Let's check out this here ETF. Pretty much consolidation here in this range is kind of stuck here. So if you're a momentum trader, you might want to look once we get below these lows or above all-time high, or I guess this isn't all-time highs. This has a long ways to go for all-time highs. Bottomed out here in March of this year and had some really good movement going up here. So today was a down day. So this kind of stuck in this sideways action here for quite some time here, about a week or so, a little over a week. We've been talking a little bit about Bitcoin. Where was that? Let's check Bitcoin out, see what that did today. Actually, here it is. So Bitcoin was down 3.8% today. So this one as well is kind of we hit a high here back here for a while on August 16th. So this has just kind of been sticking around this between 1270 or 12,400 and $10,000 mark. So I know there's a lot of Bitcoin bulls out there, so just keep your risk management where that needs to be and play that as what it's telling you to do. Let's check out your Ethereum. Ethereum's a cryptocurrency I like to peek at. Off the highs of $1,400. We're down at $346 per Ethereum right now. So let's move on. Let's get into, let's peek at the Forex calendar for the week before we get into the Forex market. So this is the currency, I shouldn't say the Forex calendar. This is the overall news calendar, economic data calendar coming up for this week. This morning we had some ECB President talk. So these in the Forex Factory, it's a good place to find some free information on what's happening in the news, economic data. Anything in red are usually high volatility, high impact news events. So keep an eye on that. Nothing much with the USD today. Tomorrow, Powell will be testifying, so there might be some volatility there. They had some, the meeting minutes last week, which didn't bring any real answers to the economy right now, which will bring some uncertainty into the market, and that could be why we see some of the sell-off here in the last few days. New Zealand dollar will have a rate statement that are projected to stay the same. That can be a high volatile market in the New Zealand dollar. 9 p.m. This is Central Time, so keep an eye on that. And Wednesday, Euro has some things. Powell will be talking again or testifying on Wednesday, same as Thursday, and really nothing going on Friday. So might see some volatility in the currency market, especially for the dollar and the New Zealand dollar, just based on some different economic data events. Scotiabank is another site that I like to find some just general information. It's nice to know this stuff. You don't really want to. I guess you can make your decisions off of this, but you're basing your decisions off fundamental information. The charts don't lie, and we'll talk about that as we get into the dimes. But Scotiabank's a nice place to find some free information. All right, let's dive into the currency market before we get into the viewer question that we had last week. Let's check out the euro dollar. Euro dollar, as we talked about last week, is in wait and see mode. We were in this no man's land, basically half court. So not a whole lot to do there. By the way, waiting for the trades to come to you. Let's go back to the euro dollar. Waiting for the trades to come to you is, I'll just take my prices off here. Sorry about that. Waiting for the price to come to you is important. That way you don't have emotions involved here. As you know, we have a position on the dollar yen, and I actually got into this position late. So ideally, we would have got in at. Let's just rewind here a little bit. We have a short bias based off our weekly chart here on the dollar yen. Okay, so with that, we want to be shorting. And by the way, this is not trading advice. This is strictly for entertainment only, mainly my entertainment. But I actually got into this late. Ideally, you'd want to get in on this lower band on the 104.25 area. Unfortunately, I was able to get in a little bit late, which gave me a little bit better price, a little bit less risk on the trade, which you always want low risk in your trading and investing. Stop here at 105 and target at 102.50, 175 pips. Moving on to the cable, that's the pound dollar. Nothing going on there. It's wait and see mode there. Okay. Australian dollar. We're kind of waiting to get, I believe it's long here on the Australian dollar. Just take a peek here once the charts load here. Had a stop out here. That's why you have your small risk, high reward. Have a stop out here. So ideally, we're going to wait till we get a close above here to jump on the momentum, bring it up to 750, so 7,500, basically 75 cents. Or otherwise getting in on the pullback at 70.75, stop at 70 cents. Okay. Let's peek at the dollar CAD. This one here is going to be, we'll have some opportunities coming up here shortly. If we can get a close here on this weekly chart above the 32.50 area, we'll be on the weekly chart. We'll be looking to go long here probably next week if this continues to show some bullish momentum. Let's peek at the New Zealand CAD. I believe there's an opportunity there in the. I think it's short. Yeah, it is. We talked about this last week. We have our short bias waiting for this weekly chart to load. We got this close below the 87.50 area, and at 89.25 we had a pull back, pull up, whatever you want to call it. looking to take this down to 87.50. And by the way, as I said earlier, this is not trading advice. This is strictly for entertainment only. All right, we had a listener question last week. Let's dive into that. And it was the Canadian yen. And I'm going to build this out. It was Dredan123 had a question about CAD yen. And let's just build this out real quick. And he was talking about going short on a 4-hour chart at 79.25. So let's just build out our chart cents, or $80. And just to make this go a little bit faster, I won't put exact lines, but I think you guys, if you've been watching for some time here, you know what we're talking about here. 82.50, close enough. Let's change this red. I like to put things red just to give you an idea, or just so you know where you're at in the chart. So he was asking, Dredan123 was asking, price cross below 80 on the weekly, and then cross below 79.25 on the 4-hour chart. Would you take that short? So first off, let's analyze this. You can make your own decision based on your own risk management parameters. So let's take a peek at 80 even, 750. It's down here. All right. So personally, based on the rules we've been talking about, let's change these green. Change this one to green. Basically, green means go. Red means no action. Anything once we cross that, we get a reset anyway. So, whoops, not yellow, green. All right. So he was asking if, since we had a cross below this 80 mark here on the weekly, would you go short on the 4-hour? So based on the rules, I'm looking for a close below or above. Right now, we talk about Forex Daily Dimes. We're in, basketball references, and with that, I would have no action, basically wait and see mode, because I'm looking for the bulls and the bears to really fight this out. The institutions, the big money, the smart money, they're fighting this out. And I'm looking for them, either the bears to take control above the 77.50 area, or the bulls to take control above the 82.50 area. So personally, I wouldn't be in a trade right at this point, even though we got to close short below this 90 or 79.25 area. I don't really have a bias, so I personally wouldn't short at this time. But this is strictly for entertainment. If you want to take that trade, if you have your proper risk management and you are a little more aggressive, by all means, that's your decision. I wouldn't be in this trade at this point, just based on the rules that I have. So hopefully you have a strict set of rules and you follow those rules every single time, and that's how you can test as well. You can see what is working, what is not working, what pairs are working. I don't currently trade this pair. Maybe it's something to look at. We've seen this trend pretty good. They got the 90-cent area, so that maybe there's some opportunities. Maybe on another show we can back test that, see what type of results it has. Obviously, back testing only gives you past performance, so it's all contingent on what's going to happen in the future. But if you put proper risk management, low risk, high reward, high probability entry points, let your risk manager play it out. Simple math game. So that being said, like I said, I wouldn't be in the trade at this point. I would wait to get some momentum either to the short side or the long side, and let the institutions fight it out. As you can tell, there's a lot of, back and forth in here in this no man land from 77.50 to 82.50. So I would wait on that one. So let's wrap it up for the day. Tomorrow is the 22nd. We're going to have Jeff Manson on the show, and he's going to talk about Fibonacci. He's going to go into Fibonacci. He's a big advocate for using the fibs. So there's no fibbing around with Jeff Manson. That'll be tomorrow. So that'll be 22nd, and we will also we'll cover a lot of the futures market tomorrow with Jeff Manson, and then we'll also dive into the Forex Daily Dimes. Might be a little bit longer show tomorrow, so hopefully that's a good one. And until then, retire young, my friends.